I like talking bonds. The most active conversation is been about bonds in the Discord, and a lot of people, many of you, following what we've now become known as the Pablo trade. A little overview for those who aren't aware, which I would make the assumption that you all are, of what exactly the Pablo trade is. The Pablo trade is this: patiently waiting around implied volatility levels before you're getting into a trade and scalping around. I love this trade, by the way, and I think it's a great way to build up your account. I think it's a great trade as long as you're respectful of the trade. And what I mean is being respectful for the trade. The trade, as it's kind of taught, was done with a weekly implied volatility bands. So if we just come here, weekly, okay, apply, okay. What I want you to be very careful of is when you're doing this trade, if you're very active on both sides of the trade, and I posted this morning, you're not allowing the market to move, okay? Every time it touches the top, you want to sell. Every time it touches the bottom, you want to buy. Well, take a step back and think about what you're really doing. You're making a bet that the market's never going to move. And, common sense, I think if you take a step back, eventually the market's going to move. Be aware of that, okay? You can't just blindly do this strategy, even though it has been, reliable lately, but there will be a time where this thing really starts moving. And that's when you have to take a stop, either stop yourself out, and I would really encourage you to use a P&L stop, or we'll talk about different ways to defend that trade. A lot of people in the room have been using options on futures. I think that's an excellent approach, because options on futures, when you lose, you know exactly what you're going to lose. You're going to lose principal, but just make sure that when you're making money, you're making enough money to cover those losses. You can't be quick to take profit every time the thing upticks, right? So, for instance, if you're going to do, this kind of play here, give it time to breathe. Maybe take off a little bit at the zero line, but you also end up missing a good portion of the move. Don't feel like you need to take profit right away, especially if you're in those options. Now, if you're in the futures and you buy hopefully more than one, then I would use the balance of your position to take shorter term profits and to build, to work on that account growth. Does that make sense up to this point? Okay. Now let me expand on this. When doing this trade, another strong suggestion I would have for you, I always will look at monthly first. You can even go further back if needed. Right now, it's been in somewhat of a tighter range, so I don't think you need to go back more than monthly. But use that perspective to see where it is in the monthly. If you'll notice, the weekly, it's really breached those bands, and that might seem like, okay, it's a big move, but the monthly might put that trade in perspective for you, because breaching the monthly becomes, pretty significant. Breaching the weekly, sometimes it's just a rounding error. Sometimes it's just these things can move, right? They're slippery. Hey, Michael, let me just share and then read. I've been using outrights to scalp on my options as they go in the money instead of taking. I love it. I think that's a great approach. Is that the best way to take profits? That's a really good way to trade. And if you can get comfortable trading like that, that will allow you to be like a specialist in that kind of trade. So I think, and I hope this doesn't come off as confusing, I think, Michael, if you go down that path, and I think it's an excellent path and it's working for you, you're going to get a lot better at it. For somebody who doesn't trade like that, they shouldn't try to trade like that and then not trade like that and then go trade like that. Stay consistent with whatever kind of approach you're going to use. I think that is a excellent way to play this trade. But what I don't think is, if you're going to buy puts, I don't think that you should also sell futures. I think that if you're going to buy puts, you should only buy futures to scalp. So buy puts, if it goes in the money, buy a future. If the future starts making some money, take it off. Don't double up on direction. Think this trade is all about tail risk. The bond trade has a similar risk profile to kind of like, I don't want to say this in a scary way, but selling out of the money options, where you can make money a lot of times, but you better not fight it. If it goes against you, you need to have a hedge or a plan. Because if you just buy puts and then sell futures, you have tail risk to the upside, and the market will figure out where you're scared, and it's going to go there. I don't know how it knows that you're scared at a certain level, but it does. So consistently make money in this trade, but be proud. Like I saw in the Discord, some people were in a trade and they ended up breaking even on a trade. That is awesome. If you can be down a bunch of money on this trade and it comes back and you break even, that's growing up in the trade. That's a victory. That's a huge victory, because that means you can get in and survive a bad move. And I forgot who was talking about it. And then you got to go back and audit yourself and think, how could you have done better? Because I think that even in the weekly trade right now, when you talk about your levels, you may want to consider what would happen if it goes down here, because this is not the area to stop yourself out. This trade, again, once you get comfortable, it's not that hard to make money, but when it moves, it's really hard not to get killed. And I know that kind of the verbiage sounds really scary, as long as you know about it, because it could move, and it moves further than you think. And if you go back here, we hit the upper bands, it starts selling off. You might hit the bottom band on a weekly, but look at the follow through in a monthly. So keep that perspective. Don't think this is all of a sudden getting cheap because it's at the bottom of a weekly range when it's got a lot more to go on the monthly. I think all options should be held to expiration, by the way. I think the intentionality of options, and sometimes I feel like a broken record when I say this, options have optionality. The benefit of being in a long options position is the optionality. So if you can finance that and trade futures around that and cover the downside, now you're only playing with house's money. And bonds don't move until they move. And when they move, they revalue themselves.